everyone, and welcome to this edition of FTT Chats. I'm Lisa Moyle, Director of Strategy at BC Innovations, and today I'm really delighted to be joined by Emma Mackonick. Emma is a partner with Sherman & Sterling, and she focuses on data protection and privacy. Hello, Emma.
Hey, Lisa. Thanks for having me.
Thank you so much for making the time to join us from sunny California.
Yeah, sunny California. My pleasure.
I thought we could kick off with you telling us a little bit about your area of focus at Sherman & Sterling.
Sure. As you mentioned, I'm a partner here in the Menlo Park office at Sherman & Sterling. I'd say my focus is working with complex technology development in whatever form that comes in, and global clients. And typically that's harnessing data in some way. You know, I've been a practitioner in this space for more than 20 years across 3 continents, and the constant thing that I see is that all of our companies, all of our innovation and growth in the global economy is really around commercializing a set of intellectual property assets that's a little bit like a Rubik's Cube. And the flavor du jour at the moment is data. And so that's a lot of what I focus on. I help global companies think about what they have to think about when they are collecting, using, deleting, storing, processing their data. And we look at it from the intellectual property asset when they're commercializing an asset. We look at it from the privacy and data protection asset when you're talking about humans and identifiable individuals. And we look at it from a cybersecurity perspective. And I'm based in Silicon Valley, which, you know, is the heart of all things innovation, but obviously we serve a global clientele. So I get visibility onto all sorts of really cool and new and innovative products in that capacity.
Well, that is a fantastic introduction, because so much of what you outlined there goes to the heart of both what we'll be discussing today and when you join us for the Open Finance event in a couple weeks' time. So open banking, open finance with customer consent involves sharing sensitive financial information. What's the best way to ensure that those accessing that data and information protect it and use it in an ethical manner?
It's a really good question, Lisa, and I think it's one that a lot of our clients and constituents, you know, sort of grapple with. Everybody wants to do the right thing. And I like the fact that your question focused on protection and then using it in an ethical manner, because I think those are fundamentally different things. They may converge around the same result, but they are different processes. I think if you're going to talk about protection, it's, you know, you sort of start off with good data practices. That sounds simple, but you have to break it down into specific issues. You're talking about security to protect the data, not only from outside hackers and other bad actors, but also your internal processes. So access controls, internal and external, to the extent that, you know, the external access is actually provided in some cases. And that access control can be, you know, really fine-tuned and restricted, not just in terms of the volume of personal data that can be accessed, but also the types and the attributes of that data, which, you know, becomes an increasingly important dialogue in the open banking context. And, you know, what else? Data minimization. You know, don't collect any more personal data than you have to for the purposes that you are using. Don't keep the data for any longer than you absolutely have to. And think about that from a product design perspective. You know, there are APIs out there that can be designed to just to provide you with a result: approved, not approved, recommended, not recommended, rather than transferring an individual's personal information to another firm. And this, you know, this sort of goes to that heart of ethical design point. And it's something that we work with clients a lot, like how to operationalize what a lot of these laws are. And if you're also thinking about protecting the data, I think, you know, the sensitive aspects of it are that it's personal. So is it possible to build a product that gets you the same value and the same results, but that you're using, de-identified or aggregated data? And I think that's an important consideration. Is that data going to be sufficient for the purposes that you're using it for? And sometimes yes, sometimes no. And I appreciate it's a different answer for different constituents. But it also can be, a way of thinking about that as a long-term data strategy, right? Like, can we use this data in a way that's de-identified, and can we do more with it that derives value for, the company, the shareholders, and the customer if it's de-identified in some way? Because if it's no longer personal data, or if it's not the data of a data subject, depending on how you define that, then it's not subject to a lot of the the very important data privacy laws around that. The species of which we have in California is the California Consumer Protection Act. And if you're talking about de-identified data, then I think that allows for that open banking concept, right? It facilitates the transfer of data among entities in the ecosystem. And that can be whether it's de-identified, that can also be whether you're talking about aggregate consumer information. And those are specific terms under the California legislation, but they're concepts that are, endemic in all good data practices. And certainly in Europe, and a proliferation of other countries globally. If you can't identify, the individual, or in California, the individual or the household, then there may be more that you can do to protect that information by simply taking the personal components out of it. So those are, I think, the elements around the protection of the data. Something slightly different when you're talking about the ethical use. It permeates all of those issues that we just talked about. But, ethical use and good data governance is really about business practices and good culture, and care being put into automated decision making, for example. The GDPR includes certain rights of notice with respect to automated decision making, and that you can't do it without notifying the data subject. That idea is pervasive and is certainly caught on in where I live in Silicon Valley, but throughout the United States. And you also have to think about your data sets. We touched on this a little bit earlier about how insular certain data groups can be, and that my day-to-day is very different from your day-to-day, or that of other people throughout the globe. And making sure that your data sets are sufficiently representative of the relevant population. And, there's a discussion around what the relevant population is, but certainly making sure that you're drawing from a representative set of people or data points. And I think that goes towards that ethical use, that careful, thoughtful data governance, and, bringing more people to the table in the design phase when you're thinking about a data business and data product, or the use of data, and understanding that there's a very different user experience that can be had depending on what perspective that you bring to it. And the same issues we talked about earlier that are more in the protection category, data minimization, data deletion, and de-identification. Those are all the sort of ethical constructs of some of that protection that you are doing with respect to people's data. And, I'd say this concept is more fully developed in Europe, but there is definitely a sense among the data and technology intensive companies that I work with here that they're custodians of their consumers' data. And that takes, that there's a responsibility that comes with that. And I think, in recent years, the population here at least has understood that if they are not the customer, then they are the product. And that there is a consequence to that a certain amount of data exhaust is what is being leveraged in order to have access to free products. But just because it's free doesn't mean that companies can do whatever they want with that data. And I think that's where the regulators have had some pretty thoughtful input. And that's that's changing the compliance posture, that is changing the way that companies here. A lot of the clients that I work with look at this. Data governance and good ethical practices is seen as a competitive advantage rather than this sort of irritating and expensive afterthought. And I think that's going to be the way of the future.
That's a really interesting point, that becomes actually a selling point. That's, that I suppose that has to do with consumer confidence in those companies. You raised so many interesting points there, Emma, about protection and ethics and product design. But you also mentioned the kind of direction of travel and regulation in the US. Obviously, in Europe, there are, and the UK, which is still part of Europe, there are some strict rules around protection of customer data and control and access. So it sounds like you think that the rest of the US will be sort of traveling in the direction that California has?
One would hope. I mean, I think anyone who's spent any time in the United States understands that they are anything but united. You are dealing with 50 different countries and 50 different, very, very different personalities. As we've seen in recent times, you can't assume any kind of homogeneity within a voter bloc, for example, let alone within a state. And the US and the EU have quite different approaches to privacy. Obviously in the European Union, privacy is based on a human right to privacy, which is, largely informed by European history. The US doesn't have that. It's not protected as a human right at the federal level. And the US doesn't have the same sort of overarching approach. Data is, a byproduct. Data is, in many ways, something that can be used and leveraged. And the US has taken a much more fragmented approach towards protecting sensitive types of information as opposed to data writ large. And obviously with financial privacy, we're going to talk about GLBA because of its focus on financial products for personal, family, and household purposes. That's deemed to be sensitive and therefore worthy of protection. The TCPA protects consumers from unwanted telephone marketing. The CCPA is focused on the protection of consumer information, especially since the law was recently amended to exclude personal information from employment and B2B contexts. So we're coming at it from very different starting points, the US and the EU. There's convergence around certain key issues. But it's not a given that the US will move towards an approach that's similar to the EU's. However, I live in sunny California, and as I mentioned earlier, we have both the privilege and the responsibility of living in the future a little bit here. And as the United States' most populous state, it can often be a bellwether for how things are moving. And California does, in fact, recognize privacy as a human right. The Constitution of the state of California treats privacy as one of the inalienable rights that's listed in its Article 1. And you have to, if you need a clue, you can look at the shift between the California Consumer Privacy Act to the California Privacy Rights Act. It seems like semantics, but it's not. It's shifting the emphasis. And California has very much been out on the forefront of a lot of these privacy laws. There are data breach notification laws in every state, but that doesn't necessarily enshrine privacy in quite the same way as the GDPR and others like it throughout the globe do. Will the US move to, will there be any kind of federal unity? I kind of hesitate to make predictions about federal legislation at the moment. DC's got some other issues to deal with during this transition period. But there surprisingly has been quite a bit of continued interest in doing something in this space. There have been, multiple iterations. It sort of waxes and wanes in particular after the CCPA. I think the latest missive in this space was in September, just a couple months ago. We had the Safe Data Act that was put forward by 3 Republican senators from Roger Wicker, John Thune, and Marsha Blackburn. It's, surprisingly ambitious, considering there's been very little consensus in the federal space. It would not apply to smaller businesses. That's a really big issue here in the United States. I mean, I think it is everywhere. Small businesses would be excluded based on the number of employees and revenue and the volume of personal data. But it is moving towards this idea of individual rights, which is a new federal concept. The government applies it to itself, but it hasn't applied it to businesses, which would, it would result in the same things that we've seen in Europe: transparency around notices, as well as rights to access, correction, deletion, portability, which are all concepts that I think your European audience is more than familiar with. And there would be consent that would be required for the processing of sensitive personal information. And that's, again, a taxonomy that I think you're all familiar with. Similar concepts around data minimization, limiting access to third parties and service providers. You'd have to probably do privacy impact assessments for large data holders. There would be a registration of data brokers. They were data security requirements. So you can see none of this is new, right? You've seen it elsewhere, and certainly in Europe. And right now the proposal is that the FTC would promulgate further regulations, and they would be the enforcement authority. And for it, to have any serious teeth, obviously it would have to preempt all state laws relating to data privacy and data security with respect to the, entities that are covered under the act. That's going to cause a little bit of controversy if the federal legislation is, assuming it gets passed, if the federal legislation isn't at least as strong as the CCPA and soon to be the CPRA in California. Why would we replace a strong state law with a weak federal law? It tends to be the byline that goes with that. So we'll have to wait and see how much bipartisan activity there is on the Hill. But what I think is interesting for your audience is that clearly this is part of the conversation. If you are building a program that's going to be targeting the United States, build it this way in advance, and then you don't have to do, retrofitting. There's nothing worse than retrofitting. Developers don't like having to rebuild old things. They want new and shiny. So build new and shiny along these lines, and then you're sort of tinkering around the edges. And especially if you're coming at it from Europe, your systems already anticipate this. Your product already anticipates this. But, is there a grand unified piece of legislation, one act to bind them all? Not yet. And it may take a little bit of time to get there.
Yes, I can see why that might be the case. That was really interesting. Thank you. And
Sure.
Finally, Emma, you will be joining us for a panel discussion at FTT Open Finance on the 9th of December. Guardians of the Data Galaxy. And then thinking again about open finance, open banking in particular, obviously in the UK and the European Union, it progressed in a particular way with mandates behind it to share data.
Sure.
What are some of the things, in the absence of those mandates, how can we expect that to be the US system, financial services in particular, to move to a more open data ecosystem?
It's going to take a lot of heavy lifting because it's a pretty fragmented system. And not only are there obviously 50 states, but you're dealing with multiple regulatory entities and multiple different kinds of data. So, I look at these things in terms of regulatory verticals and data horizontals and what's the cross section between them. And that's kind of a good way of looking at it whenever you're developing a product, right? Like what's my regulatory vertical? What is my data horizontal? Where do those intersect? And what are the things that I'm going to have to take into consideration? Because, we have multiple overlapping laws in this space. You've got CCPA and CPRA here. In New York, you've got the NYDFS cybersecurity regulations and whatever else is coming up. Multiple federal laws may apply depending on the nature of the data set. If you're talking about kids or children's data, which seems counterintuitive in the banking context, but not if you're dealing with custodians or custodial data. And if you're dealing with high net worth individuals or investment on behalf of trusts and children, surprisingly, that data comes up a lot. And there are a lot of different federal agencies and numerous, U.S. regulators in the financial space that are more inclined towards a traditional view of financial institutions as the keepers and the protectors of personal information. And they tend to draft regulations accordingly, which might not really facilitate open finance efforts, especially given the sort of overarching, let's call it tension between big tech and big government, right? A lot of the incumbents, a lot of the disruptors in this space are not necessarily financial institutions. They're technology providers that are that understand there's a gap with that interstitial layer and they have to understand the financial sector, but they're not financial sector native companies. And I think, you're going to get the treatment of data as an asset. It increasingly turns up on the balance sheet, and firms are likely to protect their data for their own uses. So the impulse to protect what you've spent a long time building and collecting, treat it as a trade secret and protect it via contract and certain IP restrictions. And you've got, the high cost of a data breach in the United States. I mean, it's a high cost everywhere, but an enormous amount of regulatory attention. And I think potentially a unique characteristic in the US is the consumer class action that follows invariably followed by the securities class action. So you've got a lot of these issues that are on this side of the ledger. And I think what's on the other side of the ledger is just customer demand. Companies go to where their customers want them to be. They might not get there at the same time. They might not get there in the same ways, but you risk becoming irrelevant if you don't move into this space. And I think individual actors, trade groups, and the social component of making sure that there is the democratization of access to finance, making sure that the underserved and the underbanked are accessed, and that a lot of the impediments to that kind of, financial access transfer are removed. That's got a lot of political weight, and I think that will need to be weighed against this, the burden of history and the burden of the way that we've always done it. And I think that is a very powerful countervailing force. How that particular sausage gets made, TBD, the subject of a future blog post. But I think all of these fractured and disparate regulatory entities are eventually going to need to converge around meeting the needs of their constituents, whoever those constituents may be. And the customer demand is clear and overwhelming in this space.
Yeah, no, that's fascinating. And it sounds like those competitive dynamics will meet head on head with the kind of regulatory blockers. Well, there's clearly so much to talk about in this space. Thank you so much for your time. And I think it gives us a real prelude to what's going to be a fascinating conversation at the event in a few weeks' time. So thank you again for your time, Emma.
My pleasure. Thanks so much for having me. It's been great.
Fantastic. Take care.